SoFi's stock is popping. Over the last 5 trading days, it has moved up almost 8%. And there are actually a couple of different catalysts going on in the market right now that are causing SoFi's stock price to move up. So in this video, we're going to discuss those different things and how they actually relate back to SoFi and could have a business impact on the company in the long term. I'd like to hear your opinion on SoFi. Where do you think this stock is headed over the next couple of years? Leave a comment down below. And if you enjoy this video, drop a like while you're down there and subscribe for more videos like this one. Transparency is the most important thing on this channel. I want to talk to you guys about the positions that I hold, especially when we're talking about a stock that I have in my portfolio. This is the YouTube portfolio. It's currently sitting at a value of $63,401.40. And within this portfolio, I do hold SoFi stock. I have 200 shares. I also have another 100 shares in my Robinhood portfolio. And right now it's sitting at a market value of $3,200 when we originally invested around $1,200. So we are up almost 175% on this position. And one thing I've been doing to generate a little bit of additional income against my SoFi shares is I've been selling some covered calls. I've only been doing this in the Robinhood portfolio, and I actually only did this when the stock went up to around that $18 mark. I sold a couple of covered calls. More recently, with the stock dipping, I've kind of withheld from doing that. However, with the stock running up in the last few days, I'm considering selling some more covered calls around that $17.50 mark. If we see the stock move up to around $17, I will likely go back to selling some covered calls. That's a price where I'm comfortable liquidating a few of my shares. However, I plan to at least hold on to 100 shares in this portfolio. It just depends how the stock moves, obviously. If it gets vastly overvalued, then I'll likely sell out. But right now, I'm still comfortable holding these shares. Within this portfolio, I also hold Alibaba, Google, Apple, Microsoft, Palantir, PayPal, Super Microcomputer, and Visa. And I have a couple dividend ETFs, SCHD and VYM, and then a cash position of $13,500. So keep in mind as you watch this video that I do own shares of SoFi, and my overall thesis on the company is bullish. In the last 6 months, SoFi's share price has moved up by over 100%, and it's now getting back to the highs that we saw back in 2021 when SoFi was much more of a hype stock. The difference is now SoFi is actually a profitable company. Back then, they were not making any money, but now they are actually seeing positive EPS. They reported their last earnings on January 27th and came through with EPS of 5 cents and had a massive beat as well on the top line, coming through with revenue of $739.11 million. And they've been able to reach profitability while still growing their user base. Back in 2021, they had 3.5 million members. As of 2024, they were sitting at 10.1 million members. So they've been able to almost triple up their members over the last 3 to 4 years. And this could just be the start of growth. We could actually see some additional members coming into SoFi with a change that we are seeing in government. Donald Trump is talking about shutting down the Department of Education. And this could actually be a benefit for SoFi because what it might do is it might push a lot of students who previously were getting federal loans to look to private loans. And this is where SoFi could come in because one of the products that they offer are student loans. This has actually been one of their growth points early on for the company. However, they have expanded significantly and done a great job of diversifying their business. So over the last couple of years, when loans have actually kind of suffered because interest rates have been higher, they have gotten a number of customers in using a lot of their SoFi Money products, SoFi Invest, credit cards, everything that SoFi really offers. And as they have gotten these customers into their ecosystem, it's more likely that they're going to choose some of their lending products later on. And this is a potential huge growth vector for the company. Anthony Noto did a great job over the last couple of years of actually diversifying the business away from lending products as interest rates were increasing. And he started focusing on these higher growth areas. Like we mentioned, SoFi Money has been a huge growth vector for the company, growing by 51% year over year. However, lending products have not seen the same growth. Student loans especially have only grown by 9% year over year. And this is a major opportunity, especially if we see the Department of Education dismantled. Keep in mind that what Donald Trump is talking about is not the complete getting rid of the Department of Education. Ultimately, what he wants to do is he wants to shift it from the federal level to the state level. So these loans, even though they are currently federal, they may just turn into state loans. So I don't don't think the opportunity is massive for SoFi. I think that there will still be a number of state student loans. However, it should open up some of this market for SoFi. And another recent positive catalyst for SoFi has been the pausing of tariffs on Canada and Mexico, as well as more definition around tariffs for China. And the reason this is positive for SoFi has to do with CPI or inflation data. Inflation from March till September went down from 3.5% to 2.4%. However, in the last few months, it has increased from 2.4% all the way back up to 3%. And investors have been worried that with this trend up in inflation, as well as increasing tariffs on countries that the US gets a lot of their goods from, we could see inflation spike up even further. And the reason this is concerning for investors is because of what it could mean for interest rates. We have seen interest rates trending in the downward direction over the last few months. However, if we see inflation spike up in a major way, we could potentially see that trend reverse and the Fed look to increase interest rates. And that would be massively concerning for the broader market, but especially for SoFi and their lending products. So what we have seen in the last couple of weeks is a little more certainty from Trump around what he plans to do with tariffs on Canada, Mexico, and China. And that has helped the market feel a little bit more confident that inflation data is not going to spike up in the wrong direction, forcing the Fed to increase interest rates. And lower interest rates should have a positive impact on SoFi's top and bottom line numbers. For 2025, analysts are expecting 25 cents of EPS. That is up from 15 cents in 2024. However, they're expecting an even higher jump in 2026 with EPS reaching 46 cents. And a lot of this jump likely has to do with the Fed potentially decreasing interest rates over the next couple of years. What I think is sometimes overlooked for SoFi is their top line growth. This is a company that is still very focused on growing their top line and growing their overall member count. We can see that for 2025, analysts are expecting 23% growth year over year. And in 2026, they're only expecting 18% growth year over year. I think that these numbers could actually be a little bit low. I wouldn't be surprised if in 25 we see 25 to 30% growth for SoFi's top line. And in 2026, if we do see interest rates continue to fall, I think that they should be in the range of 20 to 25% growth. Right now, in terms of valuation, SoFi has a forward P ratio of around a 60. I think that that is probably fair for SoFi. If we see them continue to grow, they can outgrow this valuation, and I think that would be a positive thing for SoFi in the future to see their PE ratio closer to maybe a 25 to a 30 long term. That is likely where they are going to have to trend, even lower than that in the long term, because oftentimes you see the banking sector trending around a 15 kind of PE ratio. If you look at a lot of the major banks, that's generally where they trade at. However, SoFi is still in a growth phase of their business. If they continue growing their business, they can justify a higher PE ratio. However, again, at some point in the future, as they start getting large enough, I think that they will have to trend back down more in line with the rest of the industry. And that's really where my strategy of selling covered calls against SoFi comes in. Because if they need to grow into their valuation over the next year or two and really trade sideways over that time period, I can still get a little bit of gains by selling these covered calls and hold on to the shares. But remember, don't take advice from some random guy on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, thank you guys so much for the continued support. If you did enjoy the video, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, have a wonderful rest of your day. And for the joke of the day, what do you call an anxious fly? Check the comments down below for the answer. Thanks for watching.